Alright, what's happening? Monthly review to dates mid-May. Was going well last week until Friday, so seems to be a bit of a pattern at the moment with my Fridays. If I look back in the other months, let me see if I have a bad Fridays, but very often I think it does happen to be a bad Friday. Yeah, look, this is a pattern. I'm just after realizing this. Look, every Friday I'm red. Almost every Friday. This is why it's good to review or to record keep, because you can look back and you can start to see patterns in your own behavior. So this is a psychological thing coming into Fridays, where I may have been trading reasonably well and disciplined throughout the week, but on the Fridays, for whatever reason, I get distracted and I get loose, and I lose. So plenty to discuss, but I want to keep this video concise because I don't want to bore people and I want to just get to the nitty-gritty. And I want to show some trades that I've taken during the week and discuss basically what happened on Friday. And it's a recurring issue of mine where I was trading NNOX on Friday, and so just to go, I'm going to discuss these points in a bit more detail in this video, and I'm going to firstly go through the trades. Right, so I have them saved down here, all my screenshots of my trades. So we'll start back. We'll start on Friday, I suppose, and we'll go backwards. So this was Thursday, I think. Now on Friday I was looking at NNOX and I was thinking that maybe this was gonna have a red day. So I was looking for an overextended gap down play, and this was the situation on the daily chart here. So I've been going up since a couple of weeks ago, since the beginning of May, when it announced big news, revolutionary new X-ray imaging technology. So this got some big attention and it's a strong news story. The volume dried up after that, but the stock kept going up, and I regret that I didn't get in early on this one because I did see potential on it, but I did trade it on breakouts and so on, but I didn't hold any piece for a longer term view trade, which I feel like I should have. When it came to Friday, I got short prior to the open because it had come down from the pre-market highs, and I got involved in the high 1919s. I figured at the open this probably could surge to the 20s and I should try and get an entry, but it did happen, but I just wasn't quick enough or brave enough maybe to take a position into that surge, brief surge. But I added as it was coming down, and then I covered partial down here, and for a period of about half an hour the stock just didn't go any further, volume dried up, and I should really know to take off the position at that point, as it looks like it's still holding up. The news is strong on this one and the volume is low, relatively speaking. There was a big sell-off initially, which is probably just a big institution or whatever just taking some profits, but the general public who were trading this were still bullish on this. and I don't imagine that they were going to be in with that big a size to have them selling off on just a 50-cent pullback. So when this dried up here, it was like, well, there's no more sellers going to really come in. The institutions and so on are probably happy with their position. They've probably got in somewhere in the teens, I'd imagine. I do know late on Friday I learned that BlackRock, some big institution, were in on this, were long on this. So there was conflicting indicators on this day because there was an offering that they could do apparently. So there were, I don't know, maybe was it 4 million shares they could do an offering on. I'm not 100% sure on the detail, but when a company does an offering, the stock that they put more shares out for purchase, which dilutes the supply of the stock, and that can cause the stock to go down. So those conflicting indicators. So I had the mindset on this day that this could have a big red day, but because of the conflicting indicators, institutions buying it was counteracting the threat of the offering. I was like, well, why would an institution buy in the late teens, say, when there's a risk of an offering? So maybe they know something and they're confident that there might not be an offering, or if there was an offering, it wouldn't affect the stock price that much. So it was just conflicting indicators. There wasn't anything clear cut about it. But a danger is always getting a notion in your head about what a stock could do and trying to get this home run trade, when really I should be just taking my piece. You can hope while you're in your position that this goes further. You can take your partial covers, and I guess I did that to a certain extent, but I feel like stopping out here was maybe unnecessary. I should have got all out here and only kept a tiny piece, but I didn't keep a tiny piece. I kept maybe more than half. So I think I was small win or break even or small loss in this, can't remember exactly. And then because of the nature of the surge in volume and price, this is a mistake that I make from time to time, which hurts me, and it causes big red days. It causes me to go on tilt, and that is I go long when I see a squeeze. Right about the direction, because it did end up going to the 21s here, but wrong about the timing. I'm buying into an excited surge of shares being transacted, and way off kind of a support area from where it's come from. I should have waited for this to come down and see if it settles and surges again, and here would have been a much more favorable entry risk reward wise, I feel, down here or even here than here. This is just a FOMO, kind of the chase here, and if that emotion grabs you, and I'm not a financial advisor, but I'm more like talking to myself, I should be taking a small piece. If I really can't resist and I'm afraid it's gonna go without me and I want to go long at this point, just take a really small starter, because the odds are that this thing will probably just pull back, and sure enough it does, but it forms a higher low, which is a bullish signal. So I'm underwater here with my long position, and then I realize my mistake and I add to my long position here, which gives me an oversized position of 160 shares, which is not a comfortable situation. And needless to say, this red candle signifies me getting out in a panic here, in fear, because I just didn't want to lose any more than I was down. I forget how much I was down on it. If I go to my trading records here, I lost 72. I mean, I was just afraid I was going to lose 100 or more. It was just so annoying. This was the overextended gap down initial loss. I lost 18, so I'm already down 18, and I only try to lose at the moment about 30 on a day, or 50 max. I should really have it at 30, and I will do for the rest of the month. But you can see that I was oversized and in a kind of a bit of an agitated state, because I was annoyed that I had been trading so well all week, and then I was suddenly down on a trade when I felt like I just should have got out and covered here, like I said. So I know I'm going into great detail on this, but the main thing is the psychology here. This is more of a psychological error than a trading error. Yeah, well, it's a bit of both really, but the psychological thing is a big thing, because 160 shares is much too big a position for what I had been taking. And the prior trade was, I think, I had 80 shares short, or 100 maybe, but this was almost double size, and it's just the stock was moving too volatile for me to cope with that. When I have a small balance, a small account, I don't want to be down $100 in a couple of seconds just because it's moved 30-40 cents. So my position was too big. That was my initial position, 100, which was manageable, but 160 is too big, and that's why I end up stopping out there. And much to my frustration, it goes. And when it struggles up here, and this is hindsight bias, obviously, this is actually the point to go short. It comes down, it comes up, it tries, and just fails sharply here. I think here on this rollover point is a good chance to go short, because you know it's come all the way now from 1880 up to 2120. So you're looking at the distance, the range it's come, and you're thinking, okay, well, what are the odds here? Given the volume on the day, given we're not in a red hot market, what are the odds of it going higher up here? Probably more odds for it to come down, and I can only say that based on experience. So unfortunately, I may have been away from the desk here at this point, and I was considering leaving it for the day, just getting out because of my mess up here. But I came back to it later, and I bought it down here for a scalp, hoping I could just get a little scalp and make back some of my losses. And it frustrated me. I ended up stopping out because I was oversized. I should have sized in smaller. So let's see what size I took on this one. Yeah, I was looking to catch it on a dip down for even a scalp. At this point I was frustrated, and I was like, oh come on, just give me a scalp, just give me a little bit, what the hell, like. But when you start fighting a stock, the odds are it's gonna screw with you, because your mindset is not right. So it was 80 share position, not too big, but I ended up losing another 20 bucks, and it just became painful at this point, where even if it's a cutting loss quickly there, it's still adding to the day's losses. So it's becoming a big daily loss. So this is almost like taking a big loss, even though it's a few relatively small losses, it all adds up to becoming. So I really should be getting away from my desk when I screwed up. And down here it's kind of in a no man's land. It's kind of very hard to read. It's like, well, it dipped here and it came out here, and I'm literally kind of getting in long, like midway between this, if you want to make a channel out of this, the high and the low of the range. It's a guessing game, and in the stock market I shouldn't play guessing games. Don't play at guessing games. If it's too much of a guessing game, don't take the trade, or at least take really small size and feel it out, see if you're right, and then add to it if it's confirming. But I think it's here I'm getting long, stopping. For all I know, I could have gone short here, I'm not sure. I think it was, no, I tried it long again. Let me check. That was yeah, here I think this was just a long, and then here I was aware, like I said before, of the um, potential for an offering to be announced. Now I was checking Yahoo Finance intermittently and kind of refreshing it to see if news of an offering would be coming true. But to be honest, like when an offering is announced, the insiders get the information quicker than us. The institutions get it quicker, and you're going to know that an offering has been announced based on the action. There'll be a huge surge in volume to the downside, and there'll be a huge sell-off. So I was like looking at the chart more to see clues of an offering, and when it started coming down here fast, I was like, okay, maybe this is the actual damn offering. And I had my 100 shares still short located, so I hit it, and then I was up down here, and I took my profit on that position. I held some, I think. Yeah, and then I decided to leave it alone, but unfortunately I just couldn't help myself. I came back to my desk a little bit later and tried to go short again, and ended up giving back the little bit that I had made back. So that's the story on NNOX. Just a messed up day, and if you look at it, you can't see the daily candle here, but it was pretty much almost like a doji candle where the stock opened and closed, not much of a difference. In between, yeah, there was a bit of action and volatility, but I didn't take advantage of it. So it was possibly a day to ignore the stock until I had a more clear-cut signal. So that's NNOX, and that's the reason why I lost 113.65 that day. I'm going to go back and have a look at why I lost on this Friday. I actually can't remember. If I just check my calendar quickly, in my diary I mean, I'll be able to see. So the 5th of May, Friday, it was actually NNOX as well. I was long at $15.56 and sold at $15.25. So might as well stick with NNOX, and we'll go and look at this one. What did I say? It was the 5th of May. Alright, this was what was this it? Minus 62, yeah. Alright, so this was it, and this was a bad trade. I didn't save my screenshot on the actual trade, but I put in my entries on Thinkorswim simulated thereafter. I put it in 2 arrows to show you where I got involved. I mean, it's not the worst entry in the world, but it had been coming from like the 14s, and it was up at the high 15s, 16s, and it was coming into the close, and it had surged here, so it was due a pullback. I probably had a bit too much size. 200 shares, yeah, it's probably too much as well. And I just thought, because of this news and so on, like I was right in the end. If I had held my position, the thing goes to 2021. So it is frustrating. You just have to be sure to get. I just have to be sure to get good entries. Get entries on dips on these ones probably, and add slowly. If I'm really eager to add into the close, I should already have a position with a good average, and I should be maybe just adding in a little, topping it up a little bit, and bring my average up slightly, but not be starting big into a surge towards the close. I think it's too risky in this market. So yeah, that's that. That's the loss on that one. Okay, so this is kind of what I was doing on that day, having that notion that it was going to do an offering and looking for a bigger win instead of reading the action and the volume, and then like I said, right ideas, wrong timing, and wrong sizing due to lack of patience, clouded perceptions. I mean, it's FOMO and fearing of missing a great opportunity and things like that. And also, like, what are the odds? Like, it's a question I need to be sure to be asking myself more often. It's like, what are the odds before I take the position? Like, when this surge is here and I want to go long, I mean, well, what are the odds of this going even further without having a pullback? It's actually more likely for it to have some kind of pullback and then go longer. So I should be looking to get entries closer to the daily low, the prior low, not in an extended place. And yeah, even up here, if I was at my desk, I'm like, okay, well, what are the odds here of this going higher? It seems to be struggling here. Why not go short? So things like that. Yeah, and trying to make mistakes, trying to oversize, trying to make up for mistakes is just a recipe for further damage to your daily P&L. Forcing matters when it should be remaining patient. Temptation to just make one more trade to make things right. So I need to get better at accepting small red days. That's my probably one of my biggest issues here at the moment. Is I know how to trade, I know how to identify risk reward. Sometimes I misread situations. When I misread or I'm not on it, I should really take a step back and think, and not try to make things better instantly, because that involves me fighting a stock, getting frustrated with a ticker, and adding small losses on top of small losses, and it ends up becoming a big daily loss. So I think I've made myself clear enough there on that. Then to look through some of the other trades on my month. Let's go back here. So far on the month, if we look at my statistics, I had a break in April, so if I put 30 days here anyway, it will include just May's trades. So here we go. Total net profit, I'm just up 15 bucks. 10 and 5, so I'm pretty much break even, but that's before fees and commissions, so I'm down. So I have to just get really careful now between now and the end of May. The market is open at the moment, but it's Monday and had a busy weekend, so I'm not feeling very alert, so I'm just going to keep a little eye on the market, but probably not trade today, and just do this video review and get back to trading tomorrow. I'm looking at NNOX in the background now. It's actually had a kind of a bounce in the morning. It dipped, bounced, and now it's just been coming down steadily now, and it's in the 18s. So that's a bit of FOMO there to see that, but I knew it was due a pullback, I suppose, and it's just a little bit early on Friday. But that's life, that's trading. I learned from it, and I mean it's come down now from the high 19s, and it's in the mid to low 18s now, and you know it's just something that you shouldn't I shouldn't be looking to trade short now, because that's a FOMO trade, because I'm thinking, oh, I'm gonna miss complete capitulation. I have to think, okay, what are the actual odds here? Has it made an offering? Like, I can check the news, I can go Yahoo Finance and see if there has been an offering announced. I don't think there has been. I think they're probably going to let this go another week and see, but it's starting to hold a bit now and starting to do a bounce. Whether it's an actual real bounce or it's more to come down, I don't know. So I think there are easier setups out there. So that's it. 1866. So no, it hasn't done any offering. Come on. Alright, so philosophy of the month is slow is fast, fast is slow, fast is slow, slow is fast. So this is the grey shaded areas after hours, and this is since 9:30 this morning. Sorry, 9:30 is not the grey shaded area, is not after hours. So this is the market open here, dipped, came up to 1970s, and it's coming down steadily since to the mid to low 18s. So bit of a bounce short opportunity there, considering it's topped out here. Actually, it's topped out up here, so it looks to be potentially backside, at least a temporary backside on this. But I think it's if I'm short up here, I think this is where I should be taking now most of my profits off, and not expecting for the home run trade. So that's all. I'll just close this recording on that, and I'll talk about my other trades in the next video, because I've been talking now for 28 minutes nearly. Thanks.